Good morning, everyone. A little bit later of a review today. Just wanted a larger break, to be honest. But all right, I'm going to review the trades from this morning. It started out fairly rough because price action was choppy. Contracts weren't nearly as bad today. The contracts have been pretty bad pretty much all of last week and yesterday as well. But I didn't really notice that today. But, anyways, as far as the pre market analysis goes, and I'll just mark these levels out real quick. All these yellow lines are my pivots, as per usual. Pre-market analysis, it's leaning bullish. Definitely leaning bullish due to this 15-minute green candle here. If this 15-minute green candle wasn't there, and it wasn't when I sent out my pre-market analysis, because I did my pre-market analysis a little bit earlier today. I did it about 10 minutes before market open. It was fairly neutral. So chopping down, as we know, is bullish. We have not a perfect, but a fairly nice trend line overhead on ES with some nice pivots as price targets. However, we did in fact miss demand down here. So if we do happen to fall to roughly here, I'd be triggered into puts for demand below. But if a majority of this pullback invalidates, I got to be in because I'm looking for a trend line break this morning up to at least this pivot up here. Well, at least the closest one, but realistically, this one up here. So I'm looking for a trend line break. And by the time the market opened, or was about to open, most of that move wasn't validated. So I'm actually triggered into calls, but as you guys know, I never enter right when the market opens. At the bare minimum, I have to wait until the last 10 seconds of the first candle closes, right? So if this candle opens bullish, I'm going to have to enter. Now, unfortunately, well, it did open bullish, but unfortunately, we did get all the way up to the first pivot. And I typically don't enter continuation trades on pivots, but I did end up entering a trade at the end of this candle, and it was QQQ calls. As you can see, the NASDAQ is a lot stronger than ES, which makes it way more likely to allow me to actually make money. Let me scroll on my channel to the trade so I don't miss anything. But yeah, so I filled QQQ calls pretty much roughly around the close of this candle here at 81 cents. PT was this pivot overhead and fairly hard stop loss. Just kind of depends. I did enter this trade half size though, because not only is it the first candle the market open, it is technically a continuation trade after potentially sweeping a pivot. ES looks like a bearish liquidity sweep. I have to go half size on this trade. So half of my normal size, 81 cents was my fill. We went up a bit more, and it was pretty green. I think it shot up to like 90 something cents. I think it was up by like 15%. But unfortunately, NQ flipped super weak, which sucks. So at this point, I'm just kind of waiting to stop out. I believe my stop loss was actually right around here. I'm just waiting for these buying wicks to invalidate and stop me out. Almost stopped out here, but NQ started flipping strong again. You can see we're actually starting to put lower lows with buying wicks in on NQ, and we're doing it on ES as well. So ES is chopping down. There's definitely a solid chance here that we do end up putting a handle and we get some janky cup and handle that plays out. But I'm obviously, because it's so close to my stop loss, I am planning on stopping out. Even though I'm half size, a lot of the times when I am half size, I do end up averaging down. Not really on this trade though. On this trade, if it looked a lot better, like if on this bounce we came all the way back up and then we made a lower low then bounced, that would be a trade that I can average down on. But right now, we dropped and now it looks like we're putting in a bearish consolidation. I'm going to have to cut it. So I cut it on this candle. I filled my stop loss at 59 cents for minus 27% loss. But keep in mind, that was only a half size trade. Okay, so 27%. Half is the same as 14% on a full size position. So pretty small loss there. I'm still leaning bullish though. I'm still overall leaning more bullish than bearish. I can't really. I mean, the hypothesis for this trade is pretty much invalidated. I'm personally thinking though it's going to end up coming back up at some point, but I don't know how far down it's going to go. because I know that this is bearish consolidation here, and I know that it's very likely to at least drop maybe to VWAP. Well, if it drops to VWAP, I'm going to be looking at like a 50% loss. And then by the time that happens, ES is probably going to be down here. Well, then I'm going to be almost triggered in for puts for this pre-market low here. And that's already marked out on the NASDAQ. So if I can continue to hold this trade past here, it can very easily develop into a huge loss. And not only that, a missed opportunity. If I don't stop out of my trade, I'm not going to be able to or ready to enter puts if I'm triggered in. Because remember, losses are nothing more than business expenses that make you available for the next winning trade. And yeah, that's why I didn't average down on this trade, even though I personally believe that it was likely to go up after. This was still the correct decision to make. And this is how all you guys should be thinking when you trade. Think ahead, right? You need to know exactly what price action needs to do to trigger you into a trade and what exactly price action needs to do to invalidate your hypothesis. If you know those things, your reaction time is going to go down drastically when you're trading. So had to stop out here. Wasn't anything huge. I think I actually entered right here. I did get the red candle that I expected, but still kind of feeling like, you know, we are. I'm still kind of leaning bullish. Well, we did end up bouncing, and ES freaking bounced. So ES flipped much stronger than NQ, and I'm triggered back into calls. So I filled SPX calls half size again, with plans to average up if we get one more solid green candle. Really, I'm looking for that PT up there. I can average down if we make a lower low, but clearly ES is stronger than NQ. I enter here. I enter these calls at 3.2. And I personally did average up here. I didn't take the full average up though, because I ended up getting a selling wick, and NQ didn't move up at all for some reason. So I didn't know if NQ wanted to make a lower low. So I did personally average up, but it wasn't. I did not bring the position to full size, and on top of that, I didn't alert it. I didn't alert that I averaged up because it happened at the end of the candle. Also, look at the volume on this candle. This ES candle has bearish volume. Now, when I averaged up, the candle didn't close yet, nor was that selling wick there. But that candle got bearish volume. So you can see the high volume on this candle. We have bearish volume there. Another reason why I didn't alert my average up, nor did I fully fulfill my average up. So unfortunately, it did end up playing out. And I did stop out of this trade on this candle here. Now, I had to stop out of this trade because now I'm bearish on NQ to get to this pivot down here. But I don't take the trade because I stopped out of this on this candle. And yes, I'm technically could be triggered in for QQ puts here. I'm not willing to lose on this trade though, so I don't enter, right? I'm not a big fan of reversing my trades. I'm not a big fan of stopping out of my trade and immediately flipping sides. That opens the door to bonus psychological deterioration or expedited psychological deterioration, and just opens the door to you getting in that habitual state of just flipping sides back and forth, and you go on tilt after a bit. And yeah, I don't mess with that. Also, the risk to reward wasn't very good either, right? My stop loss would need to be roughly up here, and the PT's here. Not a great risk to reward. And if I stop out of this trade, I would have to enter calls. I have to be back into calls because ES made a lower low, right? Because the sentiment's still alive. We're still chopping down. This is still a very fractal, like inverse head and shoulders. If we go back up, I have to get into calls. So if I enter puts here, I have to not only be willing to stop out of the trade, I also have to be willing to take another potential loss, which is entering calls here. I'm not willing to take potentially 2 back-to-back losses in a row. That would be 4 losses within the span of 15 minutes. I'm okay. So I have to sit out. No choice there. And the really nice thing about these SPX calls is the premiums of these calls for the first time in a while, at least the first time in a week and a half, actually made me fairly bullish. Because I entered this trade at 3.2. You'd think I stop out at 2.5. I stopped out at 2.9, which was a 10% loss from the alert price. Now keep in mind my average was a little bit higher. My average was like 3.3. because they did average up. I think I filled some of mine at 3.4 and 3.5, but again, it wasn't a full average up, so it didn't change my average too much. I think my average was around 3.3, and yeah, I stopped out at 2.9. So as far as the alert's concerned, it's only 10% loss. And as far as the alert's concerned, 10% loss on a half-size trade. So at this point, I'm down a very little amount today. Pretty much one solid 25% green trade. I am green on the day. So it's looking pretty good. Like I'm not, this is fine. NQ does end up getting to this PT, but ES is very strong, and NQ's getting nothing but buying wicks on the way down. So I did say in my channel, if we do break past this pivot on NQ and drop to here, I could enter puts, but personally, and I said this in my channel, I think NQ is likely to sweep this level and bounce. And again, I will be back in SPX calls if we do that. And that's what we did. Now, NQ flipped stronger here, but because NQ dropped so much more, I would still have to get into SPX calls, and that's what I did. I re-entered SPX calls. Was it on this candle? Yep, it was on this candle. Unfortunately, it did get a selling wick at the very end of the candle, so I didn't get the greatest average of all time. But I did fill those SPX calls at 2.9. Once again, half size. And again, you see that it's a recurring theme. That's going to happen some days. Tomorrow's FOMC, which is the big one with Powell talking and interest rate decisions. So it's a very big day tomorrow. And sometimes the day before, it'll be very choppy. I'm kind of seeing that. While NQ did get a nice move from this sell side pivot to the buy side pivot down here, which is a profitable opportunity, I couldn't be in that trade because of my bullish bias. And because before this trade happened, I happened to be triggered into that bullish bias for a call trade. So I had to miss this. But if ES just doesn't sweep any pivots this morning, aside from, the market open, it's going to be a red day. And I'm willing to accept it. But anyways, I fill SPX calls here. I fill them at 2.9. The exact same calls, by the way. So I stopped out of those calls at 2.9, and I'm getting right back in at 2.9 half size. I plan on averaging down if we make a lower low, or averaging up if we shoot up. And I ended up taking my ad when this drop invalidated here. Now you can clearly see that NQ is a lot stronger than ES. You can't see it as much on this candle, but I kept talking about how I want to be in QQQ calls as well because it was just so much stronger. And you'll see it on this candle here. On this candle, I end up adding QQQ calls as well, only half size, but with zero plans to average down or average up, at least at the moment. And the PT for this trade would be all the way up here. So as you can see, I'm a little bit overexposed. I wouldn't say overexposed. I'm choosing to be more exposed to this position. This is a beautiful bull flag. NQ's nice and strong. And I do end up adding to taking my second half for my SPX trade on this candle as well, because we didn't validate that drop. And look at this candle, by the way. Look at the size of this green candle, and then look at the volume of the green candle. That is very bullish. Very bullish. So I end up, my ad on SPX didn't change my average at all. Was the same. And that was it. So hard stop losses across the board, and we will see what happens now. We made a higher high. I did trim a little bit, but it wasn't my PT. So we did get new high of day. And then we popped back up, which was really nice, giving everyone a second chance to trim. We did get this terrible selling wick here. NQ swept high of day. ES hit the pivot that I was going for, and I was just going for the nearest pivot. Like I said in the pre-market, though, I would go for this pivot up here. And for some reason, this trend line on the 1 minute change is not accurate anymore, so let me fix that. There we go. I would go for this pivot up here, but look how choppy it was this morning. Very little direction, very little momentum. I'm going for the nearest one. But unfortunately, I trimmed like one single contract because I thought it broke, but it didn't. We put in a perfect double top, just like we did yesterday. You guys know how I feel about those by now. I am bullish for that to break. Most of the time it does. If it doesn't, then that is just unlucky, but most of the time it does. And if it doesn't, I'm still willing to stop out. At this point, I move my stop loss roughly up to here. And if we pull back and invalidate that pullback, I am adding yet again to my calls, which means, yes, I'm going to be heavy. It is a trade that statistically is so likely to play out, I am willing to risk a much bigger loss in pursuit of. This is the exact same type of trade that I took yesterday. So we ended up pulling back. I'm like, all right, I told you guys in my channel, if this red candle invalidates, I am in there like underwear. Now that kind of sounds like I'm going all in. I'm not. I'm literally just adding an additional half. So my QQQ position will go up to close to full size, and my SPX position will be 1.5x. Which means if this trade loses, it's going to be a fairly large red day, which I don't really mind because this setup is extremely likely. And I don't even know the last time I had a red day. It wasn't last week. It wasn't this week. It might have been early the week before. I can't remember that far back, to be honest. It's been a while since I've had a red day, so it's not a big deal to me. But if this red candle invalidates, I'm adding more calls to this trade, and my stop loss will move up to roughly like here-ish. Keep in mind, it's not like futures. It's not like a hard stop loss. But that's the risk I'm willing to take. But keep in mind, don't make a decision that you're unable to accept the outcomes of. If I'm wrong, or I'm never wrong because I'm correct, this is statistically a very likely trade. Just because this trade ends up being red doesn't mean I was wrong. I was executing flawlessly. By the way, ES and NQ should get high of day here soon. If you guys are still trading, looks pretty good. And now we may short squeeze, we may just short squeeze. It's been chopping up for a while. But anyways, that's besides the point. We'll look at that after. So yeah. Leave was on this candle. Nope. Next one. Nope. Next one. Almost. I said in advance exactly where I would be adding calls. In my channel, I said once ES gets to 671.5-ish, right around here, when this red candle validates, I will be adding calls. The same as yesterday. And I did here. I actually did a little bit earlier. I did on this candle. But regardless, I did here. So I took my QQQ ad, and I took my SPX ad. My SPX ad was a little bit, it was pretty much break even, unfortunately. And I say unfortunately because the contracts finally started chopping. I filled my ad at like 2.95. Now my QQQ calls, I filled them initially at 71 cents. I filled the ad at 84 cents. So for me, it was an average up. Again, I don't change the percentage. You know, when it comes to the recaps, I just do what percent did it go up based on the initial entry. But just know for the recaps, I got a way less percent because I averaged up, which means I made more money. And just like last time, boom, we ended up squeezing. Looked great. I actually didn't end up selling anything until it got to this level here because now it finally looked good for a short squeeze, and I called that out. I also called out my channel that was bullish for NQ to get to this level. Looked great for it. We did have a rising wedge forming, but looked like it was breaking to the upside. And it did. And I took my profits here. Only had a runner position left and sold the last of my SPX runner position here after we swept my final pivot by one tick. Beautiful. I don't have any other pivots near. Right, as you can see, there are none. There's like a micro one there, but it's not a very big deal. I'm out of major pivots. NQ is while I'm out. The only thing I have above is supply. NQ supply is fairly near. I'm bullish for it to get there. ES supply is too far away. And I closed the last QQQ runner here. Not here. It was here. And you can go on my channel, look at the timestamps. It was a beautiful exit. So those QQQ calls got to 80% gains if you stuck with the initial average of 71 cents. Obviously, I had less than 80% gains because I averaged up. And the SPX calls got 60% gains. And that I did actually get. Very nice. I think on SPX, I averaged like 50%. So very large trade. I averaged roughly the same on QQQ calls because of the average up. But again, more money was made. So I actually ended up finishing the day bright green. Because across those positions, I was in that hypothesis with 2.5x leverage roughly. A little bit under that. So 2 losses, 2 wins. But again, the losses were, minus 27%, half sized. So minus 14%. And then the second loss was minus 10%. And then these wins were plus 60% and all the way to plus 80%. But bigger than full sized. It was freaking beautiful. Very Green Day. Um, you know, the signs and the technical analysis was definitely pointing towards a short squeeze, but this didn't have to happen, right? And I would have been okay with it, as you all should be. I was more than willing to stop out and just call it a sizable red day and move on, right? Especially because FOMC is tomorrow. It's not worth chasing anything, and but we end up getting lucky. It ended up playing out. The higher probability event did end up playing out. And that's all you're predicting, right? All you predict when you're trading is which event do you think is more likely to happen. That's all it is. You put your money on it. But yeah, that's all the analysis and thought process behind today's trades. Ended up selling the top, which is beautiful, but NQ did barely miss supply. So one of the last things I sent my channel is I said, keep in mind, NQ did miss supply, so I still have bullish sentiment, but I'm done trading. So you can see it missed supply there. It did end up going back up and getting supply, which is pretty cool. As you can see here, look at the demand retest on NQ. Beautiful demand retest. There's just been beautiful supply demand lately. Boom, got the supply and then perfectly rejected it. Supply demand has been and has always been fantastic for years, for 3 years and counting. And yeah, as far as the charts look now, it looks like it's trying to squeeze back to high of day. It's doing it in a very weird fashion, though. It looks like it's waiting on fundamentals, but they're just not coming. But yeah, I'm fairly bullish for new high of day. But all right, does anyone have any questions regarding any of the analysis? How do you choose strike price? Alpha, there is no thought behind it. If you notice something in my channel, except today was a little bit of an anomaly. I always enter SPX calls or puts between $2.50 and $3. And I always enter QQQ between 50 cents and 75 cents, typically. Every single time. That's why my channel is so predictable. If I say I'm going to get into calls if something happens, you know what calls I'm going to get into because I only ever trade SPX and QQQ, and I only ever enter the same contracts. So, but today I entered initially at 3.2 because the next strike down was at like 2.2. There was like a huge spread. Usually it'd be like 2.7, but it wasn't. It was like 2.2, which tells me those contracts were decaying a ton. So I entered a little bit bigger contracts, which means I took like one less contract or two. But yeah, strike does not matter. I'm day trading. I'm scalping. The first hour of market open, my strikes do not matter at all whatsoever because I'm only in my trades for like 5 to 10 minutes if things go okay. And yeah, I did hit PT to the tick FEMA. When averaging in on calls, even though the price is heading to the downside, how do you determine price entry and do you just stop loss? What are you asking, JBS? Determining price entry of the contracts? Guys, the contract price should not have any effect on your trading. I do not give a shit about the contract price. I complain about it if it's chopping. The only time contract price ever affects my trading is if I'm in calls, price action's going up, and these calls are going down or sideways. Then that is a big issue because they're decaying and I need to move my stop loss up as a result because at my original stop loss, I'm going to be taking a much bigger loss than I signed up for. Aside from that specific scenario, contract price, everything regarding your contracts should not matter at all. As long as you're entering fairly close to the money, which on SPX you're not really able to because they're like $1,000 a contract at least, and I don't want to do that. The percent gains are too small. But typically, as long as they're somewhat close to at the money, then there you go, you're fine. And whether you're averaging up or average down, contract price does not matter. The only thing that matters is the chart. So if I say I'm going, like on this, for example, if I say I'm going to average up, if price action, if ES gets to here, I don't give a shit what the contracts are at. I am adding when ES gets to there. I don't care if the contracts are 40 cents higher or 40 cents lower, does not matter. I am placing trades because of the chart, and I only exit trades because of the chart. Unless that very rare scenario happens where contracts are chopping a ton, right? That's the only way you should trade. Because no one's profitable because they trade for money. You should not be you should never trade for money. You should only trade to be correct. So great question, JBS. Appreciate you asking that because yeah, everyone does that and everyone will never make money trading because of that. Options are simply a tool for me to test my hypotheses. That is all they are. Price does not matter. If I say I'm going to average up right here, I am averaging up right when the contracts get here. A lot of the time it's a market buy, or at the very most, I will limit buy the mid price between the bid and the ask. Especially when you're trading things like SPX and QQQ, at 0 days, it is plenty volatile enough to pretty much always fill you if you hit the mid price. Don't be greedy and hit the ask or hit the bid. Just hit the mid price and it's fine. Otherwise, if it's a trade like that where I'm averaging up and the PT's close, I have to get into the trade. I can't afford to miss it. Mark it. Yep, strictly candle analysis. If I am getting into a trade because the chart tells me to, I am getting out of a trade because the chart tells me to. That is all. You know, I'm not running spreads. I'm not selling options. I'm not taking options trades. I'm taking chart trades, technical analysis trades, and using options as my instrument to do so. And it'll be the same for futures trading, right? Futures trading is a little bit easier though because you're able to trade directly on the chart. I can't do that for options, but yeah, hopefully that makes sense. It doesn't matter. It does not. It's really not a big deal, especially if you're not in your contracts for more than like 15 minutes. So now tomorrow, you know, we have FOMC, so the contracts probably are not going to move much at all. The IV is going to be super juiced on those contracts. I may not trade tomorrow. I'll take a look at it. If I don't have any solid setups worth sticking around for, I'm not going to trade tomorrow. But yeah. Yes, correct, JBS. That is the wrong way to go. Correct. Now, if you have really good psychology, it can work, but no. No, it's not correct. That's not the proper way to trade. You cannot be getting into a trade because the chart tells you to and get out of the trade because of your options. That doesn't work. That's not. There's too much room for error there. There's too much psych deterioration. There's too much inconsistency. We want consistency. Why am I getting into the trade? It's because I am hypothesizing that the chart is going to do this. Where am I going to stop out? When the chart invalidates my initial hypothesis. Where would that stop loss be on the chart? Figure that out. And then where is my hypothesis completed on the chart? There's my take profit. Now, obviously, with options, it's a little bit more complex than futures. Futures, I just enter and exit all in one because options decay. You have to be a little bit more diligent about trimming profits because if you don't and it doesn't hit your PT, your contracts are going to sit there and decay. And also, if I have a hypothesis that's good enough for me, if I am bullish enough to enter calls, but not bullish enough to think that it's not going to consolidate, then I enter half size. Because holding through consolidation when you're trading options is going to chop you to hell. So, yeah, but everything's dictated by the chart in my technical hypothesis. If that makes sense. You just want to be a consistent trader. Just get in because of the chart, get out because of the chart. There you go. In my options, I always enter options around the same price. Always enter my QQQ trades around the same price. There you go. Nice and consistent. That's why I'm able to be so fast because I don't have moving variables. A lot of you guys are still going to the options chain to place an options trade. You should not have to go to the if you trade the same things as me, SPX and QQQ, you should never have to go to the options chain to place a trade. And you guys know what I mean. Click, you know, on Thinkorswim, you got to click trade, and then you got to click all products, and then you got to select the date, and then you have to scroll down through the million strike prices. Then you got to look at the strikes, Go to the calls or puts, click that, click buy, click your size, and then click enter. That shit does not work. None of you guys should be doing that. That is terrible. That takes so long. Good luck following my alerts if you do that. All of you guys should be using Active Trader, whether it's on Thinkorswim or what. And every single morning, the first thing I do in my Active Trade, I don't even look at the options chain. I go in my Active Trader, and yesterday's contracts will be in there. So I change the date to the June 17th contracts because today is the 17th. And then I look at, okay, what are the 60-35 calls at? Oh, they're at $1.20. Okay, let's try the 60-20 calls. Oh, those are $3.30. All right, 60-25 calls. Boom, that's $2.50. That's my range that I enter. There we go. That is set up for the morning now. And then I go to the puts, do the same thing. And then I go to the QQQ contracts and do the same thing. So by the time market opens, I have SPX puts that are around $2.50 a pop. And I have SPX calls that are around $2.50 a pop. QQQ contracts, anywhere between 50 something cents and 80 cents. And that's one's not a very big deal because you're trading a lot closer to the money. And I have QQQ calls. I have both the QQQs. So now I'm just one click away from entering SPX calls, SPX puts, QQQ calls, or QQQ puts. And if price action goes up a ton, then I just click on 60-25 calls, hit backspace twice, type 30, and now it's at 60-30 calls. Now instead of the calls being at $3.60, now they're back down to 2.9. There you go. Right? You have to be efficient with your trading. You should not be going to the options chain to place a trade. It takes way too long, way too much work. Terrible. And also, using that method, I never have to change my size. Because my size, is pretty much the same because I'm always entering contracts at the same price. So, as a future premium member, would you have video courses available about setting up trading accounts without using the options chain? There is one available, JBS. But I'll make more in the future. But yes, there is one available. But yeah, there you go. There's your guys' little tutorial about how you should be trading options. Haven't talked about that in a while because I forget to talk about it because it's just something I've been doing for years. So I assume everyone's doing it, but I forget that that's actually not a very common thing. But yeah, I pretty much set up my options as if it's futures trading. Futures trading's quick, right? You're in and you're out. One button to get in, one button to get out. All you have to do is mess around with your size, maybe trim if you want. Hard PTs, hard stop losses, which I don't have. My options is the same. One click to get in, one click to get out. There you go. Yes, it does want new Hive Day. But all right, guys, that is it for this recording. So hopefully the little rant there at the end was beneficial. I cannot put enough emphasis. If you enter a trade because of the chart, you need to get out of the trade because of the chart. Whatever your hypothesis is that caused you to enter the trade, you either get out of the trade when the hypothesis is fulfilled, or if that hypothesis becomes invalidated. There should be zero other reason you exit the trade, or else that is imperfect psychology and you're not going to be able to be profitable long term. I don't care if you set your stop loss to minus 20% and take profit to 30%. The gains that you'll make will be temporary because you're trading for money. You need to be completely detached from the money aspect. Money is a result. It's not the cause, right? You have an equation to being profitable, and that equation consists of variables such as your hypothesis, your psychology, your execution, and your result is your P&L. Your equation to being profitable does not have the results variable within the equation, right? Not the results variable, the profit. Profits are not part of the equation, it's the result. So never make profits part of your equation or it's going to fail. Profits are always the result of the equation to being a profitable trader. Hopefully that makes sense. Oh yeah, Dev, it's that one. Yep, that one's super old though. I did update it though, so I have 4 active traders because I got this glorious huge 57-inch screen. But yeah, that works, JBS. But all right, sweet. Well, I will see you guys later. Good luck if you continue to trade. I'll let you guys know when this recording is uploaded. Appreciate you guys sitting through my rant. And yeah, let me know if you guys need anything. But all right, have a great rest of your guys' day.